Okay, welcome everyone to the information session on the Cash Flow Insiders program. Little disclaimer here, everything's for educational and information purposes only. So please understand this. Everything we're doing is for educational, for entertainment, for learning, and hopefully we can all work together to get a lot better at reading markets and figuring things out. So, what's the program all about? Well, we've been seeing some crazy volatility lately. It all started last week. We saw some of the lowest volatility that we've seen in a long time. When we look at actual volatility, we look at something called historical volatility, and we really hit very, very low levels for the market in the last few weeks. And I tweeted on Twitter, on X, that really wasn't natural. That's very unnatural. Something's about to happen. Sure enough, it did. And I put out this chart right before small caps started to go. I said, listen, this is, and it was in my newsletter saying, this is something that I'm watching. If we get a soft number, and this particular chart, which is really showing a reluctance to believe that there will be more rate cuts. And I love how you can put trend lines on just about anything. And the trend line here is really showing this kind of reluctance for rates to be acknowledged in terms of rate cuts. That finally broke. Now we have 3 to 4 rate cuts expected. That may or may not happen. We'll see. But they're expecting. So when this chart breaks down, look out for a broadening of the market and softness in the mag. And boy, have we ever gotten that. We've sort of looked at, as I mentioned, we can look at tech's outperformance that went along with that very low movement, that historical vol or realized vol that we call it. Very, very low movement as we saw those big mag stocks just sort of push higher and higher and higher. And what we had was the greatest 1 month performance of the last 20 years of technology versus the broader market, let's say the S&P 500 as a whole. So this shows how strong tech was over 1 month. What has happened since then? Well, a complete reversal as everybody piled into the rest of the market, right? So we can consider sort of the S&P 490 as the rest that got ignored for all this time. We basically had fewer and fewer stocks pushing the index up. And suddenly we saw a big unraveling of this. And it happened in a very big way. Nobody could have predicted how big this was going to be. But the Russell 2000, as of a couple days ago, was the most overbought index in history. So this is going back, and this only shows 78, but apparently it goes back years for the S&P 500. So the most overbought if you look at standard deviations above the 50 moving average. And that, we don't have to get into exactly how that works, but that is an incredible, unusual move statistically. And so we've gone from the Russell and the rest of them being completely ignored and tech being everything to the complete opposite, and tech being tossed out and everything, baby with the bathwater, every kind of name just about. And Russell suddenly and the rest of the market kind of getting excited. What's it getting excited about? Well, the prospect of rate cuts, right? So a lot of the Russell, for example, doesn't really make money. It's very dependent on interest rates, not like Microsoft and Apple. They don't care what interest rates are. They're sitting on so much cash, they don't know what to do with it. But the real economy names, a lot of companies that are actually driving employment, that are keeping people working, really kind of need that boost. So we have this sort of two-tiered economy, right? Where we have some companies doing phenomenally well, taking over the world. You know, they have all the data, they have all the momentum with AI. And then we have a lot of the economy that's actually kind of suffering a little bit. Of course, people who own assets and homes and stocks are doing fine, and that's what's driving some of the good numbers we do see, but half the population is really, really struggling. So the excitement is that a lot of companies that really drive employment, and even unlisted ones, right? So a lot of private companies that really drive employment for the most part in the economy are going to benefit from lower rates. And that's what's gotten into stocks. Everyone's gotten very, very excited about that part of the economy. So I just wanted to start with that. Now, caution, we do see from a seasonal standpoint that VIX really starts to move up in the middle of July. And isn't it incredible that right on schedule, that's what started to happen in the last few days. Things starting to really kind of follow the seasonal pattern of starting to head up as it typically does. August and September are typically rough months for the market. First bit of October tends to be rough. And then things kind of turn around as we head in towards the holidays. And this becomes a very seasonally strong period of November to April. Tends to be really, really strong. About 70 to 80% of market returns in history happen between November and April. And this whole middle part is kind of sideways action. And of course, we know October can be associated with a lot of nervousness in markets. So the VIX starts to head up. So we're starting to see that really play out. It's quite incredible how seasonal things do work. So I wanted to start a little bit about what's going on in markets, the backdrop that we really talk about in our Discord room. It's things that I tweet about all the time. I am a student of the markets, and you're hopefully going to benefit from things like that when you become an insider, a cash flow insider member. As we always talk about things like that, to try to keep our members on side, or at least aware of them. If some of you know me or know about my reputation, it's really one that is associated with sensible views towards risk and reward. I'm not BSing people. I'm telling them this is where the dangers are and this is where the opportunities are. And this is how the system starts to pull the levers back and forth to take advantage of those ways. When things look really good, we do one thing. When things look rougher or bad, we do another thing. So it's about pivoting. It's not about doing the same thing over and over like many of these option overwrite funds do. And I did that for a decade. I ran a whole bunch of those funds. And I changed the way things were done within those funds because pushing the button every month the same way didn't make sense. And so I really revolutionized a lot of how these funds did business. Bringing that to you in this system. So when you learn this system and these methods, one of my students called it kind of a buffet of amazing tools. You can pick and choose what you want, but of course there's an overall overarching system that you can use that's going to help you do what needs to be done at certain times. But it's all these great things that are going to help you be a better trader, that are going to help you recognize when there's opportunity and where the edge is. Because sometimes the edge is in selling options, and sometimes the edge is not in selling options or not. And we have to be aware of that. Things can't be the same all the time. So we need to be aware of when things are changing. And we're not always going to get that perfectly. Our crystal balls are not perfect. But we need to recognize when there are sea changes happening. So the system is really based on these 5 pillars of edge: market edge, company edge, technicals edge, options edge. And then they all filter into this 5th pillar called crush the premium, which is my cute way of saying, listen, this is how we take advantage of option selling. This is what we're doing. This is the delta we use. This is how far out of the money we go. This is the term that we use because it's the sweet spot of where you want to sell options and take advantage of that time erosion decay, right? That theta decay. So these are the different levers that we push based on what we're seeing in the market, in the companies that we're picking, in the technicals on those companies. And we have technicals for longer term traders and we have technicals for short term traders. You want to day trade? Perfect. We have that. You want to be a longer term trader? And I'm really, because I managed funds for many years, I have this view to longer term trading. Although I love to trade short term as well. I did that for many, many years very successfully. And last week we were doing lots of trades like that. I had a 2-hour where we made some money. So part of that though is also seeing where the opportunity lies. And to teach in the system, sometimes the torque is in the theta, right? Sometimes the torque is in the theta. So here you go. And sometimes the torque is in movement. Sometimes we're going to make money from movement of underlying stocks, and we're going to make money on the options that way. The option goes from $2 to 50 cents, we're going to take our profit. There may have been no theta in there whatsoever, but it may have moved based on what the stock did. And when there's movement, we make money that way. When there isn't movement, we let theta do it. We let time do the work for us. When we're in a VIX 12 environment, we let time do the work for us because it will happily do that. And time value has to disappear from option. On expiry, it's gone. Doesn't matter if there was $20, $30 of time value in there, it's gone on expiry. And so we can take advantage of that when it makes sense. So the different pillars, and here's an example, Apple. So Apple came out with earnings. This was a few months ago. It jumped. It's above the 200-day. It's above the 50-day. It had been a big laggard within the Mag 7 group. The earnings were okay, but guess what they said? They said, we're going to buy back a bunch of stock, $100 billion, unbelievable amount of stock. And Apple doesn't seem to be very good at innovating these days. They're very good at buying back stock, but we need to listen to that. That's a positive. And so I started looking at options, and the premiums were very, very low. And I tweeted this, and I said I said, look, I'm telling clients, there's no options to sell here. There's no premium. You're better off buying the stock and maybe even buying some downside puts for protection. And sure enough, it went up 10, 15, 20 bucks. It's now up about 30 bucks, 40 bucks from there. Almost 50 bucks from there. So where was the edge? Well, it wasn't in selling a $2 that committed you to owning Apple a few dollars lower. It was in recognizing that the edge was in being long either in the money calls or being long the stock, and then looking for an opportunity to sell calls based on edge. I don't want to sell calls when there's no edge. There was no edge here to be in a covered call. And I posted that. And it's not that I'm Nostradamus and that I know that Apple's going up. It's that it just doesn't make sense to me to do things a certain way when the edge is not there. Apple might have gone down 10 bucks. I'm not going to lose sleep over not selling some cheap calls. I wasn't going to get anything anyway. So remember, we're always looking at things from the edge perspective. And I'm going to teach you how to do that with my background in volatility trading and option trading and selling covered calls and cash secured puts, things that I've done professionally for a living for 30 years. I've managed almost $1 billion in these strategies, and I've generated a ton of cash for investors. And so I have this idea and this approach that I developed over years. So our pillar number one, quality companies. Well, quality companies matter, right? When we're selling options, we are selling, and I posted something about this just the other day, and I said this might be the most important post you ever read if you're an option seller. Quality, quality, quality. Now you can trade lower quality, but you better understand who you are. Are you trading options as an investor? Then it better be quality. Because if I sell puts on Apple, I better be comfortable owning Apple. If I sell puts on Carvana or Coinbase, and sorry, I'm picking on a couple names there, but a little bit more speculative type name, then I'd better be ready to make more difficult decisions. If I don't want to own Carvana on the way down, I need to make the harder decisions and know who you are. Are you trading as a business and going towards higher premiums because you're scalping options? Or are you trading as an investor? And we have both in the program. We have people who just believe in long-term holdings and they want to know, how can I apply options as a way to generate more value? And there are people who want to make a living and need to make a living every day or every week and every month in order to survive. And you're doing more of an options trading business at that point, right? So there's slightly different approaches, which we welcome in the program. And that's why we talk about it here. So quality, does quality make sense? Well, I'm going to give you some hard data here. Here, put selling strategies in companies with high free cash flow yields do a heck of a lot better than the rest of the market. A heck of a lot better. In fact, for 20 years, they outperformed until, COVID run kind of ran up stocks. But for a very long time, they actually outperformed the actual market, which is amazing. Selling at the money puts outperformed the market. In quality companies, in lesser quality companies, it far underperformed the market. So quality matters, guys, and that's why we talk about that in the first pillar. Now, in market sentiment, we want to be able to learn to read market sentiment. This is very, very important because we want tailwinds behind us. We want tailwinds to help us. We don't want to do things that are difficult so that it's like pushing a boulder up a hill. We want tailwinds. I see people trying to catch a falling knife in stocks all the time. And it doesn't make any sense to me. Who are we to know where a market's going to bottom out when a stock is plunging? Let's wait. Let's wait for things to look better. Let's wait for the picture to start to look more favorable. Because I've seen people make tons of money on 20 positions, and the one or two a month that bury their account are because they broke some of these kinds of rules. And so that's why this system is about rules and guardrails, to keep you on the right side of things. Now, things are going to go wrong. They're markets. Markets are going to market, and we have ways to react to that. And that's the beauty of the system. When things get ugly, we have certain things working in our favor, which is premiums go up. We start to now look at things differently technically. In the technical lessons, I'll show you. You're doing things differently. You're selling on rallies to certain moving averages. When things look good, you're buying on sell at certain moving averages. You do things differently, pivoting. So here's Tesla. Here's the MTI indicator that you're going to learn in the program. And I tweeted about this. Here's your Tesla early January started to go down, and the indicator went yellow, and it stayed yellow, which is hedge hold, to red, which is hedge sell. And this indicator that I developed has a volatility dampener, because I'm a volatility trader, and I think you need to know what kind of environment you're in. And so it uses a volatility dampener to dial back your excitement, because there are going to be moments in bear markets where you start to get excited again. But this indicator is going to say, whoa, hold on a second. Things are not that great. Volatility is X level. You need to dial it back. And in 2022, it worked very, very well to keep you from getting into trouble. So it's telling you where to crush the premium. And then amazingly, here we go, it starts to turn green and turns full green as Tesla is starting to really, really stabilize and emerge from this long period of suffering. And it goes full green, and sure enough, it takes off again. Really great example of the MTI, helping us to know when to press, when to let the stock do the work for us, and when to crush premium, because the premiums, because that makes more sense. Here's another one. Here's your IWM. So here we go. We've got a bunch of yellow telling us when to crush the premium. Then suddenly we start going green, positive, strong green, which is a 4 out of 5. And then guess what day we go super strong? 5 is the maximum. We go super strong. This is 5. You can't see the number 5 here, but it's 5. We go super strong the day before this thing goes on a 10+ percentage run. Now, the timing was phenomenal here, but it's amazing. It started to give you this indication that things were getting interesting again, constructive from a long standpoint. That is where you stop selling premium. That is where you stop selling covered calls, for example, and you start to look at possibly getting a little bit more bullish. And we tell you how to do that. What deltas do I sell on my puts? Is it high conviction? Is it low conviction? This is a little bit higher conviction, isn't it? A 4 out of 5 strong green. And this is a super strong green where you do other things that we'll explain in the system to take advantage of what's happening out there. So again, the MTI nailed it. And then the option pillar is really kind of a little bit about what I've been talking about. What are we doing? Where are we using these levers? Are we buying stock? Are we adding to stock in a bullish environment? Are we selling calls? How much? When? What strike? Maybe we're not selling at all. Are we buying back calls, etc.? In a bearish environment, different kinds of things we're doing. We're pulling those levers back. Are we selling calls? How much? At the money, in the money, out of the money? Depends on what the indicators and what we're seeing out there, right? So the system is really about accepting what's in front of you, not trading on hope, not trading that, not hoping that things get better because we have a crappy position. No, it's trading on the reality of what we have in front of us and using those levers to take advantage of that. That doesn't mean always making money, but it means using the levers in a way. If you own a stock like Microsoft that say you've owned for the last 20 years, you don't want to sell it. This is going to tell you how to play this from a cover call perspective. How do I take advantage of this environment that we're in? And when is that environment going to tell me to get aggressive again and rely more on that long holding as opposed to selling options. So this is perfectly geared for people who love covered calls. When are we neutral? When are we aggressive? When are we more bearish? When are we more concerned and in hold mode? Perfect for that kind of situation. We just had one student, and that's exactly what he does. And he said, I love it for the upside that it gives me. I love it for the way that it helps to inform my view of volatility and where that opportunity lies. So we're always looking at edge. We're combining all the edge we can from our various pillars. We're adjusting deltas to suit the reality of what we're seeing. There we go. The reality of what we're seeing. Are we getting compensated? Are options too cheap? Are they nice and juicy? Cash secured puts, same things. A lot of the same theories are going into that. What expiries are we targeting? What are the different ways that options decay? You'll be very surprised. I'm going to show you that out of the money options decay in a very different way from at the money. And because of that, we treat them differently. And then what are the risks we're mitigating? Well, we're always thinking about our downside risk and our upside capture risk. These are the two things that we're always trying to work around. So what do you get? You get the options boot camp. So if you're a complete beginner or those who need a refresher, we've got a great boot camp that we take you through, many, many lessons. We're going to learn volatility because, again, I think you have to know about volatility. It's not complicated. It's sentiment, it's fear, greed, and everything in between. And we're going to teach you how to measure that and how to use it to your advantage and how it informs what we do within the system. How to find great stocks, lessons, scanners. We're always adding new scanners. So in the Discord, we're talking about this stuff. And I'm going to be adding a couple of great new scanners soon for shorter term traders. How to find opportunity and trade much, much shorter term. We're going to learn the MTI, which is a very powerful tool that we've talked about. The technicals, entries, exits. We're going to talk about frameworks for taking profits in positions because it's different. If it's very volatile out there, it's very different from whether from when it's very, very calm. We're going to talk to you about covering frameworks based on time and delta. When do I need to cover in order to take advantage of a move that is probably happening, that is likely happening, or is in the midst of happening? And we're going to talk about synthetics, using less capital. So we want to do poor man covered calls, things like that, which you have to be very, very careful with. But there are ways to get in. For example, when NVIDIA was $1,200, it's very difficult to trade a one lot, to sell a one lot on it. So there are different ways to do that. And of course, finding better setups based on that option pricing, which we can do with scans. Here's some great scans that we're going to teach you. How to look for things. We don't sell super high vol. We don't sell super low vol. We do things that make sense. We look for edge. Because when we don't respect edge, that's when we get into trouble. So what you get 6 weeks of live training with me. You get access to me throughout the program for any questions. We can hop on a quick Zoom. I'm available in the Discord, which you have access to right away. You don't have to wait to the end of the course. You have lifetime access to that and a lot of great tools in there. There are tools that I pay for, great charting packages. You get all that just by being in the Discord. And I'm going to be adding more and more over time. Things that would normally cost you a whole bunch of money are going to be available to you and are available to you. You're going to get a WhatsApp group for the students in the current program. All the sessions are recorded. You miss one, no problem. You get the 99 lesson Gamma Options Mastery course, which I normally sell for $7.97. Usually I put it on sale for $5.97 or something like that. So you get that thrown in. And then you get lifetime access to the Discord group. Paid tools, trades, guidance. I'm in there all the time. You want to talk about things. It's like having a pro look over your shoulder. It's like having we have some great talent in there. It's like having a bunch of amazing people at the ready, who are able to answer questions, who are trading the markets just like you are. So we've got our coupon code, option coupon, for 50% off. That's going to get the price down from $29.98 or something like that, $28.88, $87. So 50% off that. And DM me if you have any questions. DM me. You can always reach out to me at info@cashflowinsiders.com. If you want to know more about it, no pressure. It's fine. If you don't want to join the program, that's totally fine. But if you want to know, we'll talk about it. We'll hang up and you can make your decision. But I really think this is an unbelievable program that is going to give you a huge head start on so many other people out there who are not bothering to better themselves. And this is not easy stuff, guys. There are pitfalls left, right, and center. Everyone thinks they can watch an hour video on YouTube and get a full understanding of what they're doing. It's not super. It's easy. Pressing the buy or sell button is easy, but what goes into decisions is a lot more nuanced. And I want you guys to learn all that great stuff. So thanks for listening, thanks for watching, and we will hopefully see you on the inside.